Hello everyone. Today we'll be analyzing one of the gigantic stock in Nifty 50, Ultratech Cement, which is India's number one cement company. With the recent governmental push towards infrastructure sector and a peculiar analysis of ours, we believe that this is a very essential stock which is up for analysis. Many of you also requested me to do analysis on this stock. So do watch this video to the end because we will be doing the fundamental analysis of the stock, the technical analysis, and then we'll calculate the intrinsic value of the stock based on fundamentals of value investing by great investors like Warren Buffett. We will also present a very peculiar chart analysis showing a recent shift in demand across sectors. Also, we will be clearly showing the precise entry and exit points with exact stop loss and targets and time frames. So do watch this video to the end. So let's begin with the fundamental analysis of the stock. Before we begin, we do not incorporate the financial ratios and all those things. We have done the calculations, but we will not be showing them here because that information can be available to anyone on fingertips. So let's start with the fundamental analysis. The company was established in 1983. Ultratech Cement is the number one cement company in India, and it is the part of the gigantic Aditya Birla Group. With the recent shift in focus on cash conversion and cost reduction, the company has literally reported way better performance than the estimates in this quarter four of financial year 2020. The net debt of the company is expected to decline due to these cost shifting measures. It is literally expected to decline from 2.8x, 2.4x to 1.5x. The major financial activities which were on halt posed a problem to the demand, and it will be continuing to be a demand problem for the next 3-4 months. But we believe that this demand is forming a very strong bottom out, a very classic bottom out, and it is expected to rise sharply in the next financial year. We are also expecting the volumes to grow at a CAGR of 18.7% in the next 2 years by FY 2022. While the demands were affected, the company has literally benefited from lower crude oil and petcoke prices, which is saving a lot of freight, packaging, and manufacturing costs for the company. And company's management has focused on lowering the capital expenditure from 17 billion rupees to Indian rupees to 10 billion Indian rupees. So this way, management will be consolidating the assets, and it will be driving the synergies between different companies and all the partners, and it is especially focusing on reducing the leverage and logistics cost. With the reduction in crude oil prices, the logistics cost is also expected to reduce further, and as a result, the earnings before amortization and after tax, before amortization, taxes, and everything, the EBITDA margins are expected to grow over 21% by FY 2022. The large urban builders, they have managed to mobilize the laborers based on the data, and they have managed to resume construction activities. These are very healthy. There was a very healthy improvement in the sentiments of the sector in the months of January and February, but then the COVID-19 hit. But again, the demand, it was on a pause, and it will be on a pause for the next couple of months at least. But the government's boost in the infrastructure sector in the budget, as well as the special economic package, would literally lead to an increase in demand for the stock. This is our very peculiar analysis. We actually did analysis of various sectors upon various sectors. So what we found here is that if we plot a graph of Nifty infrastructure sector versus the Nifty services sector, which includes companies, service-based companies like Wipro, Just Dial, and all those companies which provide services, we can see that this strong resistance line which is being formed on the weekly chart since the last 5 years, this line has been broken here, and the stock is taking support here, and it is this curve is taking support as this line, and it is attempting to touch and test the 200 EMAs. This is a very strong indication of a shift in the demand for this sector. If you also look at the relative strength index, you will find that the strength is constantly increasing. There was a dip in this particular time frame is around the year of 2018, November 2018, when demonetization hit, and there was a strong cash crunch, and due to this, the demand in this sector fell sharply. But it is again taking support, and it is showing in strength. And this particular analysis shows a very I mean, very strong shift in the demands. So this will literally affect and will give us the results in the coming 1 or 2 years. The company has been performing and operating at a rate of 83% despite the COVID-19 lockdown, which is expected to bring up the financials in the coming future. Let us look at the growth highlights. The company is the number one cement company in India and operated at 83% despite the shutdown. We just mentioned that. The recent shift in focus on cash conversion is expected to reduce the debt by EBITDA margin from 2.8x in FY21 to 1.5x in FY22. This is approximately 45% reduction, which is a huge. The governmental's boost and in the infrastructure sector and the demand curve which we just saw, the recent shift in demand is suggesting a very healthy environment for the infrastructure sector. Now let us do the technical analysis. Fundamentally, we have found that the stock looks very strong in the coming future. So let's do the technical analysis. Let's look at the weekly charts. The weekly charts here shows that since the year 2016, since last 4 years approximately, the weekly chart is the current market price is coming in the strong demand zone. Every time, look at here, every time when the stock came in this demand zone, it bounced back. Every single time when it hit this demand zone, there was a bounce back here, every time, and here again we are expecting a bounce back to higher levels. So this is one indication. If you look at the volumes, from this fall started, the falls when this fall was happening, the volumes are pretty low, but when the price started to increase, the volumes kept on rising. The volumes are rising as the prices are increasing. This is a pretty strong indication. And the MACD is also, we can see that the MACD is kind of heading towards a crossover, maybe in the next 1 or 2 candles, 1 month or 2 months, which because of the lockdown, again, this will be impacted. But 1 month or 2 months, it will be definitely crossing this line. And once this crossover happens, it indicates again, so it signals a buy. The RSI indicator is also pretty low, so it is also giving a positive momentum. It is showing that the stock is oversold and it will be bought again. So the highlights of weekly chart analysis are that the stock is trading in the 4-year strong demand zone. After the downfall, the stock has picked up volumes, and it has almost the volumes are almost double. If you look at here, these recent volumes are almost double than the last 4-year average. So this is pretty much a strong indication. And the MACD shows a potential crossover with a buying signal. The RSI is pretty low, which supports the MACD signal. Let's look at the daily chart. The daily chart shows a rising triangle formation with higher lows and pretty much same high. But here this 50 moving average, 50 EMA has come down and the stock is taking support from this 50 EMA and this hammer formation. This is, and if you look at the volumes chart, since here only, volumes chart, whenever there was a rise, there is a rise. Volumes chart is kind of mimicking the candlestick chart, which is a strong indication. The MACD is also looking to cross over the zero line, which shows that there is a shift in trend from downtrend to the uptrend. So these are, let's quickly look at the highlights. The rising triangle formation with higher lows, and it is supported by the 50 EMA. The candlestick chart is mimicking the volume chart, which is a strong indication. The MACD is attempting to cross over the zero line, which is showing a shift in trend. Trend is changing from downtrend to uptrend. So technically also the stock looks good, pretty much good. Now let us look at the intrinsic value calculation of this stock, which is one of the core concepts of value investing. We'll be putting certain parameters. We have taken the earnings per share of the last 12 months, the trailing 12 months. It is around 201.55. This data you can get anywhere from Money Control, Yahoo Finance, anywhere. The projected growth rate in the next 5 years is 24.72 based on different analysis patterns, and this is pretty strong based on the governmental shifts and all. We are assuming minimum 15% rate of return as always, because any returns below this we do not like to invest, because you can get returns of 11-12% easily from any mutual fund. We'll be applying a big fat margin of safety, a 50% margin of safety, and the P ratio based on the last 5-year average is around 32.45. What we'll be doing is we'll be forecasting the prices for the next 10 years, and we'll be applying the depreciation and the inflation, and we'll be reducing the prices to come at the actual value of this at this particular moment. I will be doing video on how to calculate the intrinsic value, but I'll be doing that as soon as I reach 1000 subscribers. So please share my channel with your friends. So after calculating those, putting those parameters, we finally come to a conclusion that the actual value of the stock is rupees 6789. This is what the current market price of the stock should be, but due to the downtrend in the market, the current price is just 3645.50. So this is pretty much strong indication that the stock has a potential 50% upside based on fundamental indicators as well as technical indicators. There was a buying indication, but after 1-2 months the demand is likely to shift, and we advise our viewers, our investors, to buy in a staggered manner on dips in the levels of 3580 to 3620, or you can even buy around 3550 if it goes down, and you can keep a target of 4250 to 4300 to 4350 or 4400 as well in the next 1 year, and you have to place a strict stop loss of 3320. And this is all. Do like this video and do share this video and like this video with your friends. You can anytime contact us via our Instagram channel, our Facebook, our Twitter, or on our website. You can search Orchid Research and you will find us everywhere. A quick disclaimer that we are not an registered investment advisory company, so please consult your financial advisor before investing. Until next video, happy trading, happy investing, and bye bye.